Hi, my name is Brant Speshart with Steward Wealth Strategies, and I just want to say thank you for tuning in, taking the time, and investing a little bit of your day to join us for our third quarter economic review. And please, if you have a moment, follow us on social media. Follow us on LinkedIn, Facebook, Instagram, but also go to Steward Wealth Strategies in YouTube and find the SWS logo, subscribe, and hit the notifications bell. And that'll allow you to keep up with our webinars and recordings along the way. So there are 6 key areas of financial planning: retirement income planning, tax planning, investment planning, estate planning, protection planning, and generosity. These are all very important areas of our financial lives, and they're all interconnected. And our decisions with one of these areas may affect some of these other areas of our financial plan. That's why it's so important to take a big picture, holistic approach when we're making financial decisions. Here at Steward Wealth Strategies, we truly believe that knowledge is power. This is one of the reasons that we record and send out webinars, we host workshops, we have newsletters, because we believe the best client is an educated client. And if we're trying to be good stewards, we want to make sure that we're making decisions based on knowledge and facts and not emotion and rumor. So the stock market over the past quarter, we've seen a lot of volatility. It was a down third quarter for both the S&P 500 as well as the Dow Jones. But if you go and just look over the past year to date, we're still positive this year. We've seen some growth so far in 2023. We've experienced a lot of volatility, but we're still at levels above where we started the year. When you look at the S&P and the NASDAQ, the Dow Jones, depending on what day of the week it is, maybe a little flat, maybe up a little bit, maybe down a little bit. But also, if we take a further step back, we're all still above those all-time, or we're above those lows that we saw in 2022, but we're still not quite at the high we saw in January of last year as well. Now, what are some of our concerns? Inflation. Inflation is still a concern. Now, the good news is inflation is still not going up at the same pace that it once was. In fact, if you look at August of last year versus August of this year, we still see inflation, but it's not the rapid pace. August of 2022, we saw inflation at 8.3%, and this year it's about half that. But still, some of the services and products we pay for cost an arm and a leg, right? Gas, housing, going to the grocery store, it's still expensive to live. It's still expensive to go shopping. But we're used to prices going up long term. But the good news, again, is that prices have slowed down. But why have things slowed down? Well, the Fed announced last year to help fight inflation, they were going to raise interest rates. And what we saw is interest rates went up at one of the fastest paces in recent history. And they went up at the quickest rate in decades. But we all have recency bias. If we think about where rates were recently, close to 0% Fed rates, and now all of a sudden they're over 5.25%, up to 5.5%, we feel like they're really high. But the good news is interest rates have gone up for some of our deposit accounts. But the bad news is interest rates have gone up for folks that are borrowing. It's a lot more expensive to take out a mortgage loan right now, but it's a lot more attractive to look at safe investments like CDs or money market. But as of the end of this, or as of the middle of this summer, the Fed funds rate was at about 5.5%. But then you go back to March of last year, look at that. It was at about 0.5%. So that's a significant increase in a very short time period. Now, the national average for a 12-month CD is about 2%. Now, I know you can find a lot better rates if you shop around. We even have much better rates than that. But if we think about just trying to keep things in perspective, where we are today versus where we were a year ago, rates have gone up quite a bit, not just for lending, but also on the deposit account side as well. Now, I know there's a lot of concerns about, hey, what if there's a recession? Well, think about your financial plan. How do we weather the storm? One, maintain liquidity, have cash reserve. Remember, Dave Ramsey's always talked about having a fully funded emergency fund, but we also need to keep that in mind with big expenses that we know that are coming up. If we know we're going to have home repair or a vehicle purchase, let's not make that an emergency. Let's plan and save that cash on the sidelines and not take risk with it at the same time if it's going to be within the next 6, 12, 18, 24 months. But also a good way to help us weather the storm sometimes is to try to avoid the media. Try not to have too much exposure to information that's out there that's trying to get you to click here, watch this program, listen to this person. Because remember, the most dominant human emotions are fear and greed. And fear gets our attention, especially when it comes to our money. And that's why you see so many headlines that sound catastrophic sometimes, even if it's just normal news. Geopolitical unrest, we're still experiencing a lot of unrest overseas. We've got issues here, obviously, but what we're still seeing in with Ukraine and Europe and what's happening right now with the Gaza Strip, there's a lot of unrest when it comes to world affairs right now. And that uncertainty causes volatility. And that is why when it comes to investing, we have to focus on the long term. We have to proceed with caution, but we have to remember the words of Warren Buffett: discipline, long term, focus. We need to be focused when we invest. We need to be disciplined when we invest, and we need to focus on the long term. Every one of you has been an investor, and you know that the markets go up and down. But over time, markets do go up. But we've got to make sure we have the wherewithal to be able to withstand that. And that's where having a fully funded emergency fund, having a budget or a spending plan that we live within, having minimal debt, but then also having a focus on our goals and saying, hey, if these resources are for my retirement and my spouse's retirement, they need to last the rest of our life. What's that time frame look like? And even beyond us, do we want these resources to be left for future generations or future giving? Think about what your objectives are and talk with us about that. Don't let the headlines sway you one way or another. Focus on your goals and objectives and let us help you develop the strategy that's appropriate for you and your family. But remember, inflation's still a concern. And there could be maybe one more rate increase this year. Time will tell. The Fed will announce, depending on where they feel how the economy is headed. But volatility is going to remain. Volatility is the price we get for long-term growth. The stock market, equities are always volatile. There's always going to be ups and downs. And look, a recession is possible. We've had recessions before. We've been through them. But really, we've got to make sure we stay the course and focus on your long-term objectives and your long-term plan and the right investment mix to help you reach those long-term objectives. So take a look at your budget and be prepared. The Scout motto is be prepared. It's better to prepare than have to repair later on. Have a financial plan that is tailored to your situation. Talk to us about your concerns. Proceed with caution, but just know that we are here for you. Keep us in mind if you know anybody that's concerned right now, maybe just wants a second opinion. Maybe they want to get added to our newsletter, or maybe they want to see this workshop. Please share this information with somebody that you think could benefit